Hi everybody, in this video I will show you a sample question related to a flexible budget. Okay, let's see the question. Restaurant Bunyamin is a family-owned restaurant that specializes in crab meals. Data concerning the restaurant's monthly cost appear below. Q refers to the number of meals or the number of production. Okay, see here the first cost. The first cost is the cost of crab, $9 per unit or per meal, and then the cost of ingredients is $6.25 per meal. Wages and salaries is $10,400 per month. Utilities 800 per month plus 20 cents per meal. Rental is 2,200 per month. And then the miscellaneous expenses is 600 per month plus 80 cents per meal. Okay, the question asks you to prepare a flexible budget for production volume of 1,800, 1,900 and 2,000 meals. Okay, so how to answer this question? So okay, always remember, if you see this kind of question, the first thing that you have to know is you have to memorize the format for the flexible budget. So the format is like this. First, you have to show the unit of production. Unit of production. Okay, in this question, the unit of production is meals, the quantity or the number of meals. Okay, so there are three levels of production required in this question. First, the production at 1,800 units or 1,800 meals. The second is 1,900 meals, and the third one is 2,000 meals. Okay, the second thing is, in a flexible budget, you have to show the list for variable costs. Okay, you have to list the variable costs. And then you have to show the list for fixed costs. The list of fixed costs. Okay. Okay. Okay, now after that, there are many costs here. You have to identify which one is a fixed cost, which one is a variable cost. So see here. So the cost of crabs will change according to the quantity of production. So remember the definition of fixed cost and variable cost. A variable cost is a cost that will change when the quantity of production is changing. A fixed cost is a cost that will not change even though the quantity of production is changing. So this cost is a variable cost because it will change when the quantity of production or when the meals, the number of meals is changing. So cost of crab is a variable cost. This one, cost of ingredients, also will change when the quantity of production is changing. So it is also a variable cost. Wages and salaries is fixed, 10,400 every month. It is a fixed cost. Okay, this one, utilities, has two components, fixed cost and also it has a variable component. This one, rent, is a fixed cost. Miscellaneous expense has a fixed component and also a variable component. Okay, after you have identified this type of cost, then you show this cost in the list, in the budget. Okay, So now, so the variable cost here. Okay, let's see. So variable cost. So how many variable costs we have? Cost of crabs, cost of ingredients, utilities, and miscellaneous expense. Okay, there are 1, 2, 3, 4 variable costs. So you have to list all the 4 variable costs in this budget. So the first variable cost is the cost of crabs. The cost is $9 per meal. $9 per meal. So the second variable cost is the ingredients. The ingredients, the cost is $6.25 per meal. And then the third cost is utilities. Okay, utilities, the cost is 20 cents per meal. And the number 4, the cost is miscellaneous expense. The cost is 80 cents per meal. Okay, these are the variable costs. So now you can calculate. The variable costs are costs that will change when the quantity of production changes. So you calculate. For 1,800 meals, how much is the cost of crabs? For 1,900 meals, how much is the cost of crab? For 2,000 meals, how much is the cost for crabs? And also, how much is the cost for the ingredients, utilities, and miscellaneous expense? So, see, I have calculated the number. So, $9 times 1,800 meals, the cost is 16,200. $9 per meal times 1,900 meals, the cost is, this one, the cost is 17,100. One meal, the cost of crab is $9. For 2,000 meals, the cost is $18,000. Okay, for ingredients, for one meal, the cost of ingredients is $6.25. For 1,800 meals, $6.25 times 1,800, the cost is $11,250. $6.25 times 1,900 unit of production, the cost is $11,875. $6.25 times 2,000 units or 2,000 meals, the cost is $12,500. Okay, you have to calculate variable cost for every level of production. Okay, so utilities is 20 cents times 1,800, 1,900, and 2,000. So the cost is 360, 380, and $400. For miscellaneous expense, 80 cents per meal for these 3 level of production. So 80 cents times 1,800, 1,440, 1,520, and 1,600. Okay, now you have calculated all the variable costs. Then you calculate the total for the variable cost. Okay, this is the total for variable cost. Okay, you add all these numbers and then you will get 29,250. This one 30,875, and this one 32,500. Okay, these are the variable costs. And then the second thing is you have to list all the fixed costs. So remember here, see here, you have identified all the fixed costs. The first fixed cost is the wages and salaries, and then utilities has a fixed component, rental is a fixed cost, and miscellaneous expense has a fixed component of 600. So you have to show this cost in the flexible budget. So this is the flexible budget. So the first fixed cost that you have seen in the question is the wages and salaries. Okay, see, wages and salaries, it is a fixed cost, so it will not change even though the quantity of production changes. The quantity is 1,800, 1,900 and 2,000, but the fixed cost is always same. So wages and salaries, the fixed cost, this fixed cost is 10,400. This one is also 10,400. It is also 10,400. And then the second fixed cost is the utilities. The utilities is 800 per month. It is fixed. It is same at every level of production. And then the third one is the rental. The rental cost is 2,200. Okay, 2,200, 2,200. The miscellaneous, and then the next fixed cost is the miscellaneous expense. 600, 600, and 600. Okay, now you have listed all the fixed costs. You can calculate the total fixed cost. Okay, so you add all these four costs. So the total fixed cost, this is the total fixed cost. This is the total variable cost. Okay, the total fixed cost here is, you add all these numbers, you will get 14,000. You add all these numbers, you will get 14,000. Same, it is a fixed cost. They are same at every level of production. Now you can calculate the total budgeted cost. Total budgeted cost. Okay, total budgeted costs are total variable cost plus total fixed cost. So total variable cost plus total fixed cost. So you will get 43,250. This one, you add total variable cost and total fixed cost, you will get 44,875. This one, total variable cost for 2,000 meals plus total fixed cost, you will get 46,500. Okay, this is the way to prepare a flexible budget. Okay, now, okay, let's see the second question. Discuss the main advantage and disadvantage of using a flexible budget. So, the main advantage of using a flexible budget is the main advantage of using a flexible budget is the budgeted cost can be adjusted according to the actual quantity or activity of production. See here, budgeted cost can be adjusted according to the quantity of production. So when the budgeted cost can be adjusted to according to the actual quantity of production, then when you compare the actual cost and the budgeted cost, the comparison is a good comparison, and you can make a good conclusion from the comparison. It is better compared to if you use a static budget. A static budget, the budgeted cost is fixed. It does not change, even though the budgeted quantity does not equal to the actual quantity. And now, the main disadvantage of using a flexible budget is maybe it is difficult to prepare a flexible budget. This is especially if your business is a complex business and you have many cost of productions. When you have many cost production and a complex production process, it is very difficult for you to identify which one is a fixed cost, which one is a variable cost, and which cost is a mixed cost. Thank you very much.